Welcome, boys, to the new video. So today we are going to do an in-depth trading week review from the trades I took this week. Now I'm recording this video for the second time because I accidentally chose to record my other monitor instead of this one. So I'm cooked. I just waited like 15 minutes wasted because explaining everything, and I was recording the other screen. Nice. Okay, so hopefully now I'm recording the right screen. So let's get into this. All right. I forgot to set this to float on top. All right, so we had a couple of trades this week. Let's get from the first one. So the first one was on Tuesday, and it was an NQ win. We had a news close. So what happened is we were biased bearish on all three pairs, as you can see right here. And let's go like this and break them down. So boom. Bias was bearish because of the reason we had no close above this fractal, above this, below this, below this, below this. We had this fractal right here that closed below, and this right here that closed to the upside. Now we need to look at the time span of what happened first. So first we went up and closed to the upside, which means we broke structure to the upside, so we will be bullish. But then we proceeded to go down and close below. So now we are bearish. And then in the future we don't have anything, so the last is to the downside, which means we are bearish. So we are waiting for Asia high to be swept. Now in this case, this candle sweeps, and then we wait for the first bearish candle, which is right here. From here you pull out the fib tool from the low of the session to the high of current session, and this is for the low of the previous session, right? Asia low. And now you have this 0079 level on the fib tool, which is actually the fake out zone. So like this, and now we wait for price to go back up into that. But as you can see, price starts dropping down. So let's see if we have maybe a 15-minute model, which is actually, instead of giving a fake out zone, just going down and giving a 15-minute break. We have a fractal, so we might get a break here. Let's see. Yeah, we got a break here. So instead of waiting for the fake out zone, price was too strong and actually gave us a 15-minute break. So this fake out zone doesn't matter anymore. We can set up the fib tool from the high of the session to the low that broke structure, and if it extends, which it does, we just extend, and now we have a trade. 0.5957 for the entry, stop loss 1.025 on the fib tool, and from here 3R, right? Now price goes back up, extends a little bit more, so we need to adjust the tool like this, and we get filled here. We have news at 1:15 and 1:30. Both news events are banned, so we need to close this trade at 1 p.m. because that's 15 minutes prior to the news event, which is right here, this candle. So I myself closed on an average for like 0.65R across all accounts, and that's how this trade ended. Now let's go to the next trade, boom, which is on Wednesday. Okay, so I'll delete these trades. Just leave the times marked out. Okay, here comes the 8 a.m. Let's go to the 4-hour time frame and see the bias. Now, as you can see, price went down and closed below all of these fractals. So the last break structure was to the downside. So we are going to be bearish, which means we need price to sweep Asia high, which is right here. So let's get into this and see the 8 a.m. candle. Sorry, no, this next candle proceeds to actually sweep the high, and that candle that swept is the one that is the first bearish candle. So now we can put the fib tool to have a fake out zone from previous session low to current session high, and we have a fake out zone. Boom. Now we wait for price to retrace back up into this fake out zone, which happens right there. From there, the last step is the break structure on the 5-minute, which happens here. Okay, so last fractal always, and it broke structure right there. Happened pretty fast. Boom and boom, boom. All right, this candle starts going up. You need to be fast about it, execute your trade, and this is how it looks like. You get filled in the trade and you get stopped out. It is what it is, we move on. The last trade before this was a 50-minute model. This is a classic 5-minute model. Let's go to the next one. Let's see what the next one has for us. Let's make it a bit faster. Okay, so here let's get to the 4-hour time frame and let's see. BAS is still the same, it's bearish, and we, as we can see, the 8 a.m. candle actually swept the high. This would be the high of Asia, and the 8 a.m. is already London, so it goes back up, sweeps the session. First bearish candle is right here. Fib tool can be now placed from the low of the session, previous session to current high session. And here we have manual fake out, which gets completed by this candle going and filling out the body of this candle. And from there, we wait for the first break structure, which happens pretty fast. So this break structure happened in the first 20 minutes of the session, which I think is the fastest time ever for this to happen. Then price proceeds to go down a bit. We use the Fib tool from half the session to the low that broke structure. That will be right here, and then price would go down. You extend the Fib, right? Starts going back up. Boom. Here is the entry. Stop loss here. Take profit. 3R. You get filled and you get cooked. Okay, that's it. Next trade on Friday, I believe. But okay, no, sorry. This is the Friday trade. But we had 2 more trades on Friday. I took only 2 because that's what my rules state, 2 trades a day max. So this was the first trade. The second trade was on EU, and it was basically the same. So we were bearish, and price swept out Asia high right here. It created an equal high with the Asia high. So we count that as a sweep if it's the exact same level. So as you can see here, it says here, right? So 1.16142, and then the high is also the same price. So this right here is a sweep. This is the first bearish candle. Price goes back up, and that's the fake out. Now we wait for the break structure, which happens pretty late in the session. Now the Fib tool would go from the high of the session to the low that broke structure, right? And price continues to go back down. You extend. Now we have a situation. We have a New York crossover as the second chance. So let's apply that. First, this is the range. For New York crossover to apply, the first candle after the New York open has to extend this range. If it doesn't, then we don't have a trade. We don't have a second chance. In this case, it does not. Then we go to the 15-minute time frame to have a second chance of seeing the New York crossover. It has to be the first 15-minute candle after New York open to extend the range, which, as you can see here, does happen. We extend the range, price starts coming back up. You set your limits here and take profit 3R. Now, while this was happening, the same thing happened on oil. So I was waiting, in this case, on both trades. I had both limits on both trades, and I got filled first on EU, and that's why I had to remove the limits from oil. Now, this trade ends up losing, but let's go check out on oil. Okay, so on oil, let me break down the whole thing again. So Asia high gets swept, first bearish candle, price goes back up, fakes out, and then we have a break structure here at 12:30, right? After 12:30. So we can't enter the trade because it's after 12:30. So we wait for 1 p.m. to have a chance at a New York crossover. In this case, we need to see the first candle after 1 p.m. extend the range, and in this case, this candle does that. So as you can see, it extended the range, boom, and that's it. New York crossover is applied. You can enter on these levels. One thing I wanted to mention though is that this candle on 1 p.m. is not an extend. This does not do the NYC. So if your range is like this and this candle does this, this is not a New York crossover. That's just an extension of the range, and you extend and wait for this candle. This candle has to extend. So either 13:05 candle, or on the 15-minute time frame it will be 13:15 candle. Okay, so this candle does extend the range, and now we can actually wait for the trade to come back up. As you can see, you would get filled here, stop loss will go there, and you would set your TP to 3R. Boom. Let the trade play out, and that's it. This trade was a perfect example of why we don't set stop loss to break even after some point of the trade. As you can see, price went so close to take profit, then came back up all the way to break even and then to TP. So if you were to set your stop loss at break even or somewhere in profit, you will get stopped out. And that's why we don't do it in the first place. Like, okay, this is a bit hard on your mentality if it happens where you come so close to take profit and price just goes back up and stops you out. But you have to be normal with that. You have to like mentally be okay with your trade reversing even though it's so close to take profit. And the way you do that is by closing your laptop and not looking at the trade at all. That's the best way to do it. So if you are managing your trades, that's where your psychology problems might come from. If you eliminate that, if you just stop looking at the trade and let it play out by itself, the psychology problems have been eliminated and there's nothing else. Of course, once you turn on and you see that your trade went so close to take profit and then reverse back up, you might feel something, but that's already done for the fact. The trade is done, you move on to the next trade and it becomes easier that way, okay? So, for example, maybe someone in my case would right now be fucked up in the head. Why? Because they took 2 losses and their model now says you can't take any more trades, and then the last trade that is on the table that you don't take because you can't because of your rules, it hits TP. I should be mad right now, but I'm not. Why? Because this happens and it's completely normal and I do not really care. I put myself in a position where in the beginning of the month I picked up around 8 payouts and I'm already set for the month, so I don't really care how the rest of the month is going to be. And that's how profitable trading is made. I also have like money saved up, so I don't really care if the next 2 months lose. I'll be fine. And that's how you should approach trading every single time, okay? So this trade was the last trade of the week and I ended the trade minus 2.35R. We are still up on the month, but this week was a red week and there's nothing you can do about it. So move on, boys, and let's look in for the future weeks coming and let's end this month whatever it ends like. I can't control it. I follow the model and that's it. Whatever model does, that's how it will be. Okay, guys? So that's it, boys. See you in the next one. Peace out.